on, traders? This is Jack with the Trading Tribe, and today I wanted to bring a pretty cool video that kind of goes through something that has really helped me with my trading, and I think will really help you with your trading. And it's really the importance of the different time frames in the markets and the different time and place to use these different time frames when trading, especially in the futures market, if you will. And in a lot of my videos, you'll see that I use different time frames. So on Thinkorswim, up here at the top right, where we see this 1M, that stands for 1 minute. So the main chart I trade off of is the minute chart because I am a day trader. I do like to see the price action kind of down to that lowest granularity level, if you will. But when trading, right, you can control the time frame that you're looking at, right? So I have another video on aligning time frames and some of the important nuances there. So definitely go and check that out if you have not seen that already. Today will be more so a focus on why we have these different time frames and how I use them to have a clearer picture on what I'm actually trading in the markets. So if we look at my screen here, we have natural gas pulled up. And like I mentioned, right, this is my 2-day 1 minute chart. So in Thinkorswim, you can actually go and create all of these. So if you want to copy me and have kind of the same list, you can go and click customize and create these. But essentially, there's only a few charts that are designated as those main charts. You can obviously customize these and get nuanced if you want. But these charts that you see here are going to be some of the main ones that will be very useful for you moving forward. So the way it really works is on the left-hand side is the time frame, right? So in this instance, I'm going to be able to see 2 days of data, right? And then the right-hand side of the colon is the candle movement, essentially. So every minute, I'm going to get a new candle on this chart. So down here at the bottom, I can look at today. I can also see this dotted line, which indicates this is yesterday. And I can also scroll to the left for another look at yesterday as well. So because it's a 2-day 1 minute chart, I can essentially go back to yesterday, or I can look at today, and every candle in this instance is 1 minute. I also have a 10-day 1 minute, just so I can kind of go back and look at the price action of the last 2 trading weeks. So that's just a preference, but it's really the same chart. Essentially down here at the bottom, I can go and scroll essentially back in time a little bit more there. Then if we look at kind of, the different levels of zooming out, right, our next level is what we call the 5-minute chart. So if we look at this, I have a 5-day, 5-minute chart. Similar to the previous kind of example, we can control the left side on how many days we go back. I just like it being a 5-day, 5-minute chart. And if we look at this, right, this is going to really zoom out, right? We can see at the bottom here, we can see our different days, and we can see 5 trading windows or 5 trading days, and every candle is 5 minutes. And you'll notice kind of right away, right, this is actually where I've set my levels for natural gas, and it honestly gives you more of a clearer picture of direction, right? So when you're trading in a market, if you're looking at the granular 1 minute chart, sometimes it's hard to tell what's even occurring in the market, right? Because you're so zoomed in. So essentially when we're trading, sometimes it's really useful to zoom out. And that's essentially what we've done here, right? We've looked at the last week, and now every candle is 5 minutes. So not only is this a slower forming chart, but we get to see way more price action and way more kind of moves that have occurred in this given market. And I like to set my levels on these higher time frames because these levels typically are stronger than levels on the lower time frames. So we'll kind of talk through some of the implications there too. Then the next chart that I like is the 30-minute chart, or the 15-minute chart, excuse me. So we have a 10-day, 15-minute chart. So again, we're on the 5-minute chart right now. So we can essentially triple the time frame, if you will, and make every candle 15 minutes. And if we click that, that's going to look pretty similar, right? We were basically only seeing half of this chart since now it's 10 days. So now we're seeing 10 days of price action and every candle's 15 minutes, right? So it's even smaller of, the nuance here, right? We can see way more data and we can see what happened 2 weeks ago in this instance. So here, we can tell pretty clearly that we've been downtrending since 2 weeks ago now. Not only the last 5 days, but the 5 days before that, right? We were still kind of in a range and downtrending, if you will. And then if we go down to the 20-day time frame, I also have my hourly chart. So this is a really popular one out there, and all of these are really popular, kind of depending on if you're a swing trader or day trader. But as you can see, right, as we level up and zoom out, it gets to be more clear. And so typically in trading, right, we'll start at the high time frame and kind of work our way down so that we understand, right, what gas is even doing before we start putting our money in the markets and trading it. And if we look at the 20-day 1 hour chart, this is what we call the hourly. So a lot of these charts you'll hear traders talk about, they're typically talking about the right-hand side. So the minute chart or the 5-minute chart or the 4-hour chart or the daily, weekly, monthly. That's kind of the slang for these different time frames, the right-hand side. And certain platforms like TradingView and stuff like that, they already have some of this set up. And hopefully, depending on the platform you're on, it's pretty easy to distinguish the like for like similar one in that instance. But in this case, right now we can go back 4 weeks of trading and every candle is 1 hour. So another cool thing about these higher time frames is you can start introducing swing trading into your actual strategies, right? Because at the end of the day, trading is the same on these different strategies on these different time frames. So a lot of the time, right, we'll take a breakout retest or a trend trade on our minute chart, right? But if we look at this higher time frame, it's really having the same sort of breakout retests and trend trades as we actually see on the minute chart. So a lot of people will take these shorts in this example as swing trades and hold them for 2 sessions or hold them for multiple sessions. And that's the really nice part about trading, right? Once you learn how this works, you can use it with your investments and with other, long-term holds and trade on these different time frames. So, and then if we keep going, right, we also have a 4-hour chart and it's 6 months of data. So every candle is 4 hours and we're going to go from a month of data to 6 months of data. So a pretty big zoom out here. If we see this, right, we're going to see a ton of data. If we look at kind of my natural gas review video, this is where kind of I was looking at on that video. This is a really nice chart that'll show you right in the last half of the calendar year, kind of what's all occurred with natural gas. So obviously we were zoomed in on kind of this portion for most of this video, but we've been in a downtrend really ever since up here in September, October, or early September, if you will. We've essentially started that sell off and have been selling off the whole time. And then 2 more or 3 more. I do like to look at the daily. So this is even a little bit more zoomed out. This is the last year and each candle is 1 day. We also have a weekly, which is obviously 3 years of data in this instance, and each candle is 1 week. So this gives you a really clear view, over the past few years in this contract specifically, right, what gas has done. And with COVID, obviously it's been a pretty crazy year. We've ran all the way to 10 almost, or 9.5 twice. And then we've failed all the way back to kind of our normal trading levels for natural gas. And then the last chart is this max chart, and it's our monthly. And I like to switch to our main futures contract, which is just NG for this main chart. And I like to go here for our actual kind of main future. So if you just do /NG, this is going to take that whole futures contract, not just the front month, but it's going to take all of the contract months and essentially put all of that data together. And in this case, right, we're going back a ton of time. So we're going to want all those different contracts put together for the data, if that makes sense. So in this case, I've gone over to that natural gas true future, and I've gone to the monthly chart. And this is essentially what it's called the max. And based on the broker, there's a different amount of data loaded, but this is as much data as Thinkorswim has on natural gas. So we can notice down here at the bottom, right, it goes all the way back to the 90s of gas. And you'll notice I have levels drawn out on even this chart to understand, right, what's the lowest gas typically goes, what's the highest it goes. And hopefully this really helps with kind of why this is so important in trading. I really urge you, depending on what you're trading in the markets, to do this top-down type analysis. And again, I have another video here on the channel kind of going over how to do that. So hopefully this was valuable. Feel free to like and subscribe to the channel for more of this. And thanks a ton for the time, everybody.